afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Brian Fernandez and with me is my co-host Jeffery Halley. It's Friday, the 12th of January, and our guest today is Kian, CEO of Astral Asset Management, coming to us out of Singapore. Kian, great to have you on the show.
Happy New Year to everyone. Good afternoon.
Happy New Year. Now, Kian, I'm gonna lead off and we've got to talk about the US inflation numbers, which unexpectedly edged up in December. Walk us through that and what are the implications of this?
Yep, I think the whole market was watching this announcement last evening in Asian time. And the numbers came in at 3.4%, which edged up from the 3.1% we have witnessed in November. So it created a sort of a concern if, inflation is going to be that sticky and all the expectations of rate cuts coming seems to be pushed further down the road. I think by the announcement of this number, the possibility of rate cut as early as January and January FOMC meeting is almost zero now, and we could only look forward, for rate cuts further down the road.
Okay, so in that context, though, there's been a lot of store placed by some participants in the market that the Fed would start cutting sooner rather than later. And they were talking about, some were talking about January, some were talking Q1. Do you think that the start of that process is now off the cards in Q1, or is there still a possibility?
Realistically, I'm more on the camp that, if there are any rate cuts, it's likely to be second half of 2024. The position that Fed has adopted has always been data-driven, which means there'll be a delay, until they see a more, clear trend in terms of inflation coming down to the 2% target that they have set, right from the start. And given the experience in 1970s, I think FOMC Chair Jerome Powell is likely going to be more conservative rather than cutting the rates too quickly and triggering a return of inflation like what we have seen before in 1970s, which is really an ugly story.
Right. Now, Kian, on a different note, different problems on the different side of the world. We just had China numbers out this morning. The inflation or deflationary numbers were, whichever way you look at it, was better than expected. The trade numbers, however, were much better than expected, and that's quite heartening for the rest of the region. Walk us through that and what your thoughts are.
I think the trade numbers come out really positively, but it could be as a result of what we have in terms of Christmas demands in the Western Hemisphere. So, pushing up the exports from China, especially in the last quarter, when more goods are required end of the year. We got to continue to monitor the trade numbers because, honestly, the trade numbers relative to Asian countries is fantastic. But Asian and ASEAN trade numbers haven't been, great. And we've only seen some slight trends of, recovery. So we need to monitor these trade numbers going forward to see if it's a clear uptake trend or is it just, a one-off.
Okay, thank you for that. Let's turn our attention to energy markets. The other big headline this morning has been that the United States and US armed forces have conducted strikes against Houthi rebels in Yemen today. We've seen oil rally in New York, and we can see oil, both Brent crude and WTI are up over 1% in Asia today. Can you give us some thoughts now about where you see oil heading in this context, or are we at risk of a wider conflagration of this Middle East conflict?
Yeah, we've seen oil prices dripping, downwards for the last quarter to the relief of many because energy prices was crazy, and triggering, a great inflation implications for many nations. However, ever since the attack on the ships in the Red Sea, which has been ongoing by the Yemen terrorists, right? It has, triggered a response from not only the United States, but also the United Kingdom, right? Because they need to protect the shipping routes. And you can think about it, detouring a shipping route to the African side is just going to be much longer and less efficient and more costly in the longer run. So I think they took military action. I think this is just the start, right? If nothing else happens, I think things will restore to a normal because there's no huge disruption in terms of supply, and neither is there big changes in demand. But if this thing is going to play out into a bigger, Middle East conflict, given that the Yemen side was supported by Iranians apparently, it's going to be pretty uncertain, and unstable for the Middle East region, and that might trigger further volatility in terms of oil prices, which is what the whole world doesn't want to see.
And on that note, Kian Soon, given that potential volatility and obviously therefore uncertainty around geopolitics, we'll leave it on that note. Kian Soon, thank you very much for your insights. Thanks again for coming on the show.
Many thanks.
Now, we've been speaking to Lee Kian Soon, CEO of Astral Asset Management, coming to us out of Singapore. This has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez.
And I'm Jeffery Halley.
And this show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.